Let's start with point number 3. Point number 3 deals with IFRS 8.23, that is the paragraph 8.23 of the IFRS 8, which generally requires us to provide disclosures regarding some revenue, interest expenses. So I'll go by the gist. The first thing I would like to mention that think about an entity is having three reportable segments. Segment 1, Segment 2, and Segment 3. What about the other items which do not form part of these three segments? Those are reported as other segments or other items. So, for the purpose of reportable segments, if we are going to face the situation, the reportable segment in this case are only three. Even if we add another column mentioning other segments and clubbing all those assets and liabilities and the profit whatever it is, so those do not form part of the reportable segments. This concept is very much useful in case of providing the reconciliation, because standard also require us to provide the reconciliation, and whenever we are reconciling, we need to reconcile the reportable segment with the entity's profit or loss which is specified in the financial statement. That's why I've highlighted this in red. It is specifying this. Please note that reportable segments does not include the other segments presented in the segment reporting, and the same should be reflected in the segment reconciliation. We will drill down further when we're going to discuss about the reconciliation requirement. So let's go deep into the IFRS 8.23, the paragraph 23's requirement. So this disclosure mentioned in the paragraph 8.23 is not mandatory until two conditions are met. Now, there are certain disclosures that we need to make. The first one is the revenue from external customers. We sell goods to another segments within the firm, and we may sell goods to the outside customers. So under the reporting, we need to provide report for both what we have sold within the entity and what we have sell outside the entity. So the first one deals with the external customers, the second one deals with what we have sold within the entity, which means department 1 to department 2. The third one would be the interest revenue, and the fourth one would be the interest expense. So these items are apart from the revenue, apart from the profit or loss. These items will only disclose when either of two conditions are met. As I told, I'm not going to discuss the standard. I'm just going to discuss the disclosures, how the disclosure will look like. The first condition would be like. If it is providing to the CODM on a regular basis, or the decisions are being made based on these data. So in respect of interest expense, I would like to say that if we are clubbing interest expense and interest revenue, we need to provide a disclosure that we have clubbed the interest revenue and interest expense and showing it off as a net figure. And disclosing interest as a net figure would be beneficial for the entity, or which should be applicable for the entity which are dealing with interests, like bank, whose primary purpose is to provide loans, and their main course of revenue would be from collect from the interest. The fifth point would be depreciation and amortizations. Sixth point, material items of income and expenses disclosed in accordance with paragraph 97. So I have highlighted in red. The paragraph 97 of IAS 1 specify that if something in the nature of expense which is material, we need to disclose it separately. And I would like to say that IAS 1 does not specify any material amount. So which means if you have disclosed in the financial statement something which is material as per paragraph 97 of IAS 1, and the same disclosure is provided to the CODM for the purpose of decision making, you need to provide the disclosure for the same. And respect of entities' interest in profit or loss using from associate and joint venture when you're using the equity method, and income tax and expense. So income tax and expense can be disclosed in the segment reporting when we would be able to identify interest and expense separately for each and every segment, and any non-cash items apart from depreciation amortization, because we have already covered in the point number E. So let's look at the disclosure. The point number three's disclosure will look like this. This below is a reportable segment: external revenue, internal segment revenue, which means selling within the department, the total revenue, and the profit, the interest income, the interest expense. Look, they didn't club because it may not provide a true picture. The depreciations share from the investees, which means associate joint venture, for which we're applying the equity method, any other non-cash items, and that's it. And the same we need to disclose for the comparative figure. So these disclosures are the requirement of 8.23, that is paragraph 8.23. We're going to discuss in the next video.